Hello everyone. Today we discuss about the biggest challenges of international business. International company structure. First of all, we discuss about this. If your aim is to be competitive globally, you must have a team in place that's up for the challenges. One fundamental considerations is the structure of your organization and the location of your teams. For instance, will your company be run from one central headquarters, or will you have offices and representatives on the ground in key markets abroad? If so, how will this team be organized? What autonomy will they have, and how will they coordinate working across time zones? If not, will you consider hiring local market experts who understand the culture of your target markets but will work centrally? Coca-Cola offers one example of effective multinational business structure. The company is organized into continental groups, each overseen by a president. The central presidents manage presidents of smaller country-based or organizational subdivisions or regional subdivisions. Despite its diverse global presence, the Coca-Cola brand and product is controlled centrally and consistent around the world. While Coca-Cola is a vast international brand, the structure of your business and the number nationally and level of expertise of your team will vary depending on your industry, product and size of your business. Now, foreign laws and regulation. Along with getting your company structure in place, gaining and comprehensive understanding of the local laws and regulations governing your target markets is key. From tax implications through to trading laws, navigating legal requirements is a central function of any successful international business. Eligibility to trade is significant considerations, as are potential tariff and the legal cost associated with entering new markets. Now, it's important to note that employment and labor requirement also differ by country. For instance, European countries stipulate that a minimum of 14 weeks maternity leave be offered to employees, while on the other hand there is no such requirement for US employer. With the complexity involved in foreign trade and employment laws, investing in knowledgeable and experienced corporate counsel can prove invaluable. Beyond abiding by official laws, engaging in international business often requires following other unwritten cultural guidelines. This can prove especially challenging in emerging markets with ill-defined regulations or potential corruption. In response, companies in the United States must abide by the Foreign Corrupt Practices Acts, which aims at eliminating bribery and unethical practices in international business. A good rule of thumb is to beware of engaging in any questionable activities which might be legal but could have future reputational and repercussions. Now, international accounting of the main legal area of consider when it comes to doing international business. Tax compliance is perhaps the most crucial. Accounting can represent a challenge to multinational business who may be liable for corporations tax abroad. Different tax systems and compliance requirements can make the accounting functions of a multinational organization significantly challenging. Accounting strategy is key to maximizing revenue, and the locations where your business is registered can impact your tax liability also. And mitigating the risk of multiple layers of taxation makes good business sense for any organization trading abroad. Being aware of being aware of tax treats between countries where your business is trading will help to ensure you are not paying double taxes unnecessarily. A focus on tax efficiency is often the aim of international accounting efforts. In the European Union, companies may benefit from the common consolidated corporate tax base proposal, whereby companies with operations around the EU can limit tax liabilities to one corporate center. Tax consolidations is a feature of several multinational divisions to be headquarters in Dublin, as Ireland is known for its business-friendly corporate tax policy. Well-known companies with operational headquarters in the Republic of Ireland include now cost calculations and global pricing strategy. Setting the price for your product and services can present challenges when doing business overseas and should be another major considerations of your strategy. You must consider cost to remain competitive while still ensuring profit, and researching the price or prices of direct local market competitors can give you a benchmark. However, it remains essential to ensure the math still works in your favor, for margin must be taken into account for your business to be viable. Pricing can also come down to how you choose to position your brand. Should the cost of your product reflect luxury status, or will low prices help you to penetrate a new market? So Swedish furniture giant known in Europe for its low cost value struggled initially in China due to local competitor cost of labor and productions being much cheaper. By relocating the production for the Chinese market and using more locally sourced materials, the company was able to successfully cut prices to better reflect its brand and boost sales among target consumers. Whenever we are looking or you are looking to launch your product or service, here are 4 useful strategies to help you find the right price. Now, universal payment methods. The proliferations of international e-commerce websites has made selling and goods overseas easier and more affordable for business and consumer. However, payment methods that are commonly accepted in your home market might be unavailable abroad. Determining acceptable payment methods and ensuring secure processing must be a central consideration for business who seek to trade internationally. Accepting well-known global payment methods through companies like WorldPay, as well as accepting local payment methods such as JCB in Asia and Yandex Money in Russia can be a good options for large international business. And accepting wire transfer, PayPal payment and Bitcoin are other possibilities, with Bitcoin users benefiting from no bank or credit card transactions fees despite the risk of fluctuating value. The lack of fees is one of the reasons a number of online companies including WordPress, the Apple App Store. Now, currency rates. While price setting and payment methods are major considerations, currency rate fluctuations is one of the most challenging international business problems to navigate. So, monitoring exchange rates must therefore be a central part of the strategy for all international businesses. However, global economic violating can make forecasting profit especially difficult, particularly when rates fluctuate at unpredictable levels. Major fluctuations can seriously impact the balance of business expenses and profits. For instance, if your company is paying suppliers and production cost in US dollars, but selling in markets with a weaker or more unpredictable currency, your company could end up with a much smaller margin or even a loss. One way to protect yourself against large fluctuations in currency is to pay suppliers and production cost in the same currency as the one you are selling in. This may mean switching to more local productions where possible in order to better balance your outgoing and sales revenue. Another options for mitigating the risk of unpredictable currency rates can be setting up a forward contract, agreeing a price in advance for future sales. Of course, this potentially means missing out on greater profit should rate shift in your favor. However, it can protect your sales from the risk presented by unstable currency. Now, choosing the right global shipment method. The potentials of online sales presents a huge international business opportunity for retailers in the 21st century, but finding reliable, fast, the cost-effective shipment and distributions methods can be a difficult balance in some markets depending on the value, volume and destinations of your shipments. Will you send by land, sea, air or a combinations? Your choice of shipping method can be a major influence on your revenue and may be a limiting factor to the products you can viably sell overseas. Other considerations to address according to your company's products and your target markets, including customs fees, the needs of cost of storage, the local methods of distributions. There are also country-specific regulations and shipping requirements to take into account for it. So now communications difficulties and culture difference. Good communications is at the heart of effective international business strategy also. However, communicating across cultures can be a very real challenge. So developing cross-culture competency and communication skills are a core focus inside and outside of the classroom. Effective communications with colleagues, clients and customers abroad is essential for success in international business, and it's often more than just a language barrier you need to think about. Non-verbal communication can make or break business deals too. Do your research and know how different cultural values and norms such as shaking hands can and should influence the way you communicate in a personal context. Being aware of acceptable business etiquette abroad and how things like religions and cultural traditions can influence these will help you to better navigate potential communications problems in international business. So that's the end of the video, my friends. If you like my blogs, please subscribe my channel. Also comments, share my channel. Thanks again for watching my videos.